uh, we discuss about classification of taxation. So taxation can be classified according to the structure of the tax and the impact of the tax on the taxpayer. So what we mean is that the tax is classified according to the relationship between the amount paid on tax and the income of the taxpayer. So in this case, you may find that as your income increases, also your tax increases. And some cases, so that is what we're talking about. We are relating the amount paid on tax and the income of the taxpayer. So we have those progressive, regressive, and also degressive. So I would like us to start with the progressive tax. So progressive tax, this is a type of tax where the rate or the amount paid increases proportionately with with an increase in income. E.g., we have, like for example, we have personal income tax, as you can see, as we all know, or you can see here from our graph. Uh, those people who are earning between 0 to 10,000, they are not paying any tax; they are tax exempted. And then when you go to those people who are earning between 10,000 to 20,000, they pay 15% of their income as tax. Those people who are earning 20 to 30,000, they pay 25% of their income as they pay 25% of their income as tax. And those people who are earning that is 30,000 and above, they are paying 35% of their income. So in this case, uh, this amount they are paying increases proportionately with an increase in income. So in progressive tax, those with higher income rates remit a higher proportion of their income as tax compared to those in lower income brackets. That is in terms of percentage. So this type of tax is based on the belief that one only needs a certain amount in order to have a decent standard of living. That's why those who with higher income, they pay more. These are some of the advantages of this type of tax, that is a progressive tax. So number one, it reduces income inequality as the rich are taxed more. So this inequalities is being reduced when the amount that have been taxed, maybe from those people who have a high income, when that tax, so they can be used to provide essential services like education and health to those people who are earning less or low. So that means that now this one, it will bring equality, and then also it encourages people to work harder in order to maintain their standard of living. So some people will continue working hard to make sure they are maintaining their previous standard of living. The next part is that the revenue collected is higher. So most of the time, because those people who are earning more will pay more. So the unit cost of collected tax reduces as the tax increases. So when the that means that the cost of collecting this tax is somehow economical, because those people who are earning more will be paying more, therefore making the cost of collection to be low. As we continue to the next, we have the disadvantages. Number one is it is oppressive. Some people are taxed more than the others, and it punishes people for their hard work. And also, it may discourage people from working more as any additional income goes to the tax. Imagine whereby you have moved maybe from the tax bracket of 20% to 35%. So that means you will remit more of your income as tax, and that will discourage people. Investors may be discouraged from venturing into risky but more profitable business, as this will attract more tax. So that means that as you get more profit, as you get more income, you're going to be taxed more. So this one will discourage people from venturing into risky but profitable businesses. Also, another point is it's assumed that people earning the same amount of money or income have similar needs and ability to pay tax, which is in reality may not be true. So that is the assumption that has been made when they are for the countries that are using progressive taxation, that people are earning, those who are earning the same money have the same needs, which may not be true in reality. Also, it can lead to tax evasion by taxpayers falsifying about their income. So some people may try to evade paying this type of tax or paying less for by giving false information about their income. So the next type of tax according to the structure is a regressive tax. And this type of tax proportion of low income earners as compared to high income earners. This tax burden fall more heavily on the poor, which that is the opposite of progressive. So an example is sales tax, where people pay the same amount of irrespective of the level of income. That is, they pay the same, mostly about the same percentage. Doesn't matter how much you're earning. So for the assumption is based on the understanding that the one who deems it necessary to buy a certain product consider the utility derived from it to be equal to its price, which include tax. So that means that if you need any product to satisfy your needs, you're going to buy it. Therefore, you're going to derive some utility from it. So that is why each person have to pay this at the same rate. Then we have proportional tax. This one is the type of tax where the rate of remains the same irrespective of the level of income or value of property to be taxed. If the rate is 20%, then the person who earns 5,000 will pay 20 out of 100. The person who earns 10,000 will pay 20 out of 100 times 10,000, which is 2,000. So, as you can see from our diagram, so the proportion means that they are paying the same. Like in Kenya or in our country, we are for the most of the corporation tax, which are being paid by the companies, they are at the rate of 30%. So it doesn't matter how much you make as profit. So that means that even if we make 1,500,000, you have to pay 30% of that as corporation tax. And then we still fixed at a certain percentage, as you can see, and sometimes it's also called flat tax. So regardless of how large as or small personal income may be, the tax is one flat percentage. So the advantage of this is that it is easy to understand, difficult to evade, and it is easy to administer. And the disadvantage is that a flat tax is often seen as unfair to low income taxpayers. This is because you still have to pay the same amount for a big mark, regardless of if you are rich or poor. If you are rich, you have more money left over after tax than someone who is poor because your expenses are lower proportion of your income. So we have seen an example, also sales tax fall under this one. And then we have discretive tax. So discretive tax is whereby the tax rate increases up to a given maximum, after which a uniform tax rate is levied for any further income. So discretive tax is a hybrid of proportional and progressive tax. In the in the case of progressive tax, the tax rate first rises as income increases and then it stays. Like as we can see from this graph, the tax increases to a certain level, flat. So it's a combination of proportional tax and progressive tax. So thank you so much for listening and for participating in today's lesson.